Okay, welcome everybody.
Thank you, sir.
So today would be because of the power outage, we have to move on to. But in case it goes off or Kingsley's thing goes off, I'll put a link on the group, and then we can all join again. So today we'll be talking about audit strategy. We'll be talking about audit strategy or audit planning. Most of what we'll be doing today is on audit planning. In prior sessions, we talked about ISA 200, right? And we talked about some of the responsibilities and objectives of the auditor and what exactly they are supposed to achieve or what exactly they are supposed to do with regards to the conduct of the audits. So I'll touch on it briefly. I won't delve into it too much. I'll touch on it briefly, then we'll go into audit planning because it's quite tied to audit planning, so I had to bring it in. As we all know, the objectives of the auditor, again, are to obtain reasonable assurance. That's one. That the financial statements are free from material misstatement. We defined what material means. So that's something I should always keep in mind. They obtain reasonable assurance and they also report on their financial statements. Now, the reason why I had to bring this ISA 200 again is because ISA 200 is requiring the auditor to do certain things. And one of them is planning. So ISA 200 requires the auditor to comply with all ISAs relevant to the audits. By now, you should know what an ISA is. So the auditor is supposed to comply with all ISAs with regards to the audits. They're also supposed to comply with relevant ethical requirements, which is a part of the fundamental principles as well. And they are also supposed to plan and perform the audits with professional skepticism. So planning is part of the things that an auditor should do. It's very, very important. The auditor should always plan the audits. And they should also exercise professional judgment in planning and performing an audit and obtain sufficient and appropriate evidence. We already talked about these things. So you see planning show up here again. You see that planning is showing up here again. Okay. So why do we need an audit plan? For those who are taking audits and strategy together, I think it's really helpful because there are some similarities in certain areas, right? The audit plan is simply a strategy document. It's a strategy document. And a plan, as we all know, is basically a course of action that is mapped out to achieve a stated goal or objective. That's what a plan is all about. It's a course of action that is mapped out to achieve a stated goal or objective. For every audit, a plan is necessary. A plan is necessary for every audit. You can't go into an audit without having a plan. And the reason is it helps the auditor decide what needs to be done. I've said countless times that, audit reports have, fixed deadlines, because the audit report has to be released by a certain date. So there are fixed timelines when it comes to audits. And so the auditor has to decide in advance what needs to be done so that they are not beaten for time. They are not beaten for time. That's very, very important. So why do we need an audit plan? We need an audit plan to be able to decide in advance exactly the areas of the audits that we are going to tackle, or our strategic thinking behind how we are going to execute the audit. That's extremely important, extremely important. The extent and type of audit work performed, is basically a function of the professional judgment of the auditor. So the extent of the work that is performed, because the auditor, through the planning process, will identify areas of risk. So you will check the kind of audit they are doing and see the possible risk factors that they are exposed to, the client is exposed to, and make some professional judgment around that, on the extent to which they should do their audits. And the planning process facilitates that. It's through the planning that you look at the client as a whole, you look at their operations, you look at their processes, you understand the kind of business they are in, and then as an auditor, as a skillful auditor, you're able to see the areas in the financial statements and in the internal processes of the client that are exposed to risk. And then you focus your audit on those areas. Very, very key. Very, very key. A main starting point for the audit plan is deciding which audit strategy to adopt. So what kind of audit strategy will you adopt? What kind of audit strategy will you adopt? Are you going to adopt a strategy where you test, every balance, or you'd adopt a risk-based approach? We talked about all that in our last session. It's also important that the auditor considers a whole lot of things, in the planning. In the planning, the auditor must consider a lot of things. And the things that he must consider, I formed an initial for it. I call it MAC, MAC. Number one is materiality. Number two is the audit risk. Number three is the use of computers. So these are the three things that, there are lots of things, but these are the three main things that the auditor must consider when they are doing their planning. They must consider audit risk, which we'll talk about later in this presentation. So audit risk, materiality, and the use he might make of computers. When you use computers as an auditor, it affects your audit approach, or it can have an effect on your audit approach. So that's something to always take note of. Can have an effect. So when the auditor is planning, they make considerations concerning that. The auditor's work on planning is regulated by ISA 300, Planning and Audit of Financial Statements. And this requires the auditor to plan their work in an effective manner. So what does the planning do? The planning defines the scope of the audit. It defines the boundaries of the audit. The auditor is not a savior who is coming to save the company from fraud. He cannot test every single thing. So from the beginning of the audit, the plan is set out on the expected scope of the audit and how the audit should be conducted. That's very, very crucial. That's very, very crucial. An audit should be planned so that it is performed effectively. What does it mean to perform an audit effectively? What does it mean to perform an audit effectively? When we say an audit is performed effectively, it must achieve the intended results at the time when it was needed. So the audit must be performed in a timely manner, and the audit must be performed in an effective manner. It must be performed in a timely manner and must be performed in an effective manner. Very, very key. The auditor should establish an overall audit strategy. Now, when we say an audit strategy, we are simply looking at a roadmap for the audit. It's the audit strategy that defines a roadmap for the audit. So the auditor has to establish that. Okay, what will be the roadmap for this audit? What are we looking to achieve in this audit? And all that. For those taking strategy, Johnson and Scholes defined strategy as a course of action, including the specification of resources to achieve a goal. That's a brief summary of what Johnson and Scholes said. So it's a course of action. So audit strategy is also a course of action, and it includes the specification of resources. So audit strategy, as part of the audit strategy, you need to know the resources you need to achieve the audit. Okay, how many associates will I need? How many seniors will I need to be able to conduct this audit in an effective manner? So the auditor should always establish an overall audit strategy. And the audit plan should include measures for the direction, supervision, and the review of the audit work. Review is very, very important when it comes to audit work. And the reason is the structure of audits. So audits has been designed in such a way that it's structured in such a way that it can be very hierarchical. So you have the associates doing the work, then it goes to a senior, then it goes to a manager, it goes to a senior manager, it goes to a partner. So review is essential. You need to make sure that there's room for supervision and review of audit work, especially because quality is a big deal when it comes to audit work. Any questions so far?
No, sir.
Okay. Now let's move on to audit strategy memo. There's something we call the audit strategy memo. And most auditors prepare it. If you're ever be on an audit, you probably see the managers prepare the audit strategy memo. And this is basically a document. This is basically a document that sets out the main points involved in the planning process and the key planning decisions that have been taken. The key planning decisions that have been taken. But my thing here is, what does the memo cover? That's what we need to know. What is the memo covering? This audit strategy memo, what does it include? So when we discuss the things it includes, that's when you see why it's an audit strategy memo. So number one is the assignment objectives. What is the objectives of the assignment or this engagement? What is the objective for it? What is the objective of the assignment? And the reports to be issued. What kind of reports are we going to be issuing? So from the beginning, we have an idea of exactly what we are trying to achieve. Another thing is what we call the audit timetable. The timetable of the audit. Very, very important. The timetable of the audit. And the reason we have a timetable, audit timetable, is to meet the required or the reporting deadlines. Without the timetable lists the activities we are supposed to perform in the audit and by what time, the time you are supposed to achieve them. So the timetable of the audit, very, very important. Very, very important. The audit strategy memo will also include things around changes in the organization, in the client's organization or business. So any changes that affect the client, it will be included in the audit timetable. The reason is any changes that affect the client also affect the audit. Especially if these changes are major changes, it definitely affects the audit. It definitely affects the audit. So that's something the auditor will definitely include in the ASM or the audit strategy memo. In the audit strategy memo too, we include a summary of key financial ratios. In strategy, you do a little bit of ratios, not too deep, but I think maybe interpretation of financial statements, which should be in somewhere FR or FM, I don't know. You should have done financial ratios. So a summary of key financial ratios and other ratios from previous years also should be included in the audit strategy memo. Why do you think we need to include key financial ratios?
Can we say it gives a snapshot of the performance of the organization financially?
Okay, that's the reason. Yeah, that's a good one. So you can look at the ratios and tell how the business is performing. Very simple. You don't have to go through all the numbers. So an informed third party can look at it and see how the company is performing. Another component of the audit strategy memo are the planning decisions for the audit. And as usual, the staffing requirements. We cannot forget that. When we talk about strategy, don't forget about resources, please. Anytime we talk about strategy, please don't forget about resources. Resources are an important part of strategy. They're an important part of strategy. Extremely important. Okay. Now let's look at the information that is required to effectively plan an assignment. Let's look at the relevant information. ISA 300, which is planning an audit of financial statements, requires the auditor to prepare an audit strategy and an audit plan. ISA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment, requires that the auditor has sufficient understanding of the entity and its environment in order to understand the risk of material misstatement. So you see, if you don't understand the business of the client you are working with, you cannot understand the risk they are exposed to. So for example, if I'm an auditor, let's say I'm PwC, and let's say Ghana Airways was operating, so I'm auditing Ghana Airways, right? And I'm auditing Ghana Airways within this COVID period. I need to understand the nature of their business. The nature of their business is air flights. I need to understand the environment. During COVID, this COVID environment, a lot of flights have been stopped or cancelled, right? And so if a lot of flights have been stopped and cancelled, what are the possible risks that the client is being exposed to, and how does it affect the financial statements? And also, how does it affect the audits that I'm doing? So that's the way you need to think about auditing, or in the way you need to think about your client's business, right? And that's why it's important to understand the client's business. Please take note of that. It's very, very important. You cannot ignore that. Always understand the client's business. Extremely important. I hope that's clear.
Yes,
Okay.
sir.
In order to satisfy the requirements of both of these ISAs, the auditor will need to access a wider number of information sources. Remember that every assignment and client is different, so the auditor will need to use initiative and judgment in assessing relevant and reliable information to assist in planning. So my summary here is that the audit work does not exist in a vacuum, and the client's business does not exist in a vacuum. There's an external environment that is affecting your clients and hence will affect your audit. So always be on the lookout for that. Always be on the lookout for that. During this COVID season, which industries have suffered in Ghana?
So can we say the educational industry where schools had to close down, so both private schools, so mostly the private schools really struggled. Some had to lay their staff, some had to cut their wages and so on.
That's a good one. That's a good one. Yeah, so
hello, sir.
Yes.
Yes, also the hospitality industry.
Okay, when you say hospitality, who like?
Yes.
With
I'm referring to hotels, the restaurants, the tourism centers, because people are not flying.
Okay.
Yes, they don't have tourists coming around. Yes.
Oh, okay. I see. Yeah, that's also very true. That's also very true. I'm not sure why I'm not able to see the chat. Hey. Okay, hospitality. Someone said hospitality. Okay. Yeah, so hospitality is also part, right? It's also certainly part. And so if you're an auditor and you're auditing a company like this, right? You should have that background. You should have that background and see manufacturing. Somebody too said manufacturing. Manufacturing. All these things are certainly true. Are certainly true. So it's key. It's key. You need to understand the external environment. And ISA 300 and ISA 315 helps you to understand all of that. All of that. Now let's move on to information and planning. To plan effectively, you need information. You need information. So a common exam requirement will involve a scenario that misses out some information that will be relevant to the auditor, either for planning or executing the audit. So you may also be asked to identify any additional information required. So they could create a case study, right? And maybe a planning question, and they may leave out some information and ask you, what kind of information will you need to be able to plan or execute the audit effectively? You may be asked to identify any new information required. So you see, for example, obtain a copy of a new loan agreement with the bank to ensure the details of any overdraft limit and debt covenants are understood. you know. So understanding the loan, if you want to understand the loan position or the debt position of a client, you can get the loan agreement. And the loan agreement will show you the debt covenants that your client is in, and if there are any breaches at all as a result of that. That's very important. You can also review legal correspondence between the client and the legal advisors regarding any incident that has occurred that has attracted court action. You can also review the details of any significant new sales contracts agreed with clients. So all this information helps in your planning. So if there's any significant new sales contracts, definitely it's going to impact your revenue and it's therefore going to impact your audit. You can also obtain a copy of prior year's financial statements in order to review the accounting policies. That's also something you can do as well. We talked about relevant information. There's information that is relevant. When we say information is relevant, it is suitable for the effective planning of an audit, or it is necessary, or it facilitates the effective planning of an audit. You also have non-relevant information. Remember, keep this in mind, that the objective of the audit, that's why I began with ISA 200. The objective of the audit is to identify whether any material misstatements exist. The key word here is material. So irrelevant things are not included here. Therefore, information relating to immaterial matters will not assist in concluding whether a material misstatement exists may not be relevant. So the goal here is we are looking at things that are material. So immaterial items or immaterial information will clearly not be regarded. Very, very important. Very, very important. Any questions so far?
No, sir.
Okay. Now let's move on to audit risk, because we said we'll talk about audit risk. When we say audit risk, can someone explain to me what audit risk is? Like in your own words, what is audit risk? Hey, can anyone give it a try? What is audit risk? It doesn't have to be correct. It doesn't have to be correct, please. Any ideas on audit risk, please? Audit risk. Oh. Please, just any thoughts on audit risk? Anyway, no one has a clue? Okay.
No, sir, I don't have a clue.
Please, I want to try.
Okay, just try. This one is just, it's not any like, this one is not the exam.
So, okay, so with reference to the ISA 200, the main purpose of the auditor to ascertain whether there is any material misstatement on which to base his audit opinion. Mm-hmm. So I think the risk in it has to do with, I don't want to say I'm begging the question, but the risk that the financial statement that the auditor asserted to have been free of any material misstatements ends up to be incorrect.
That's all. That's it. That's exactly. That's it.
Oh, see my husband.
That's exactly. That's why I was asking if anyone can give a shot. Because if you understand the objective of audit, you should be able to explain what the audit risk is. It's nothing mysterious. It's nothing mysterious. It's nothing mysterious. So when we say the audit risk, it's simply the risk that the auditor will give an incorrect opinion, or that the auditor will say that these financial statements are free from material misstatements, and it actually turns out not to be true. That's the audit risk. That's the audit risk. That's the audit risk. Or in other words, you could say that the audit risk is any risk that the auditor would issue an unqualified report because the auditor was not able to detect material misstatements. That's also a way to look at it. If you understand the objective of audit, you should be able to explain the audit risk. Okay. A key feature of modern auditing is the risk-based approach. So I don't know who answered the question. I don't know, but thank you. You are absolutely right. So a key feature of modern auditing is the risk-based approach that is taken in most audits. I think in one of our lectures, we talked about it. At the planning stage, as required by ISA 300 and 315, the auditor will identify and assess the main risk associated with the business to be audited. So the auditor will go through that, trying to assess the main risk. The auditor will try to assess the main risk and then you try to identify them and assess them. And what you do next is you design appropriate responses to those risks. You design appropriate responses to those risks. In a way to manage those risks or mitigate those risks. Very, very important. Very, very key. So here I write that the auditor will then design and implement appropriate responses to those assessed risks in accordance with ISA 330, the auditor's responses to assessed risks, including the overall responses and audit procedures responsive to the assessed risk, blah, blah, blah.